Hey everyone, November 18th, 2025. Bitcoin's pushing $93,000 right now after dipping to around 89,400 earlier today and shaking out a ton of weak hands. Sentiment on crypto Twitter is absolutely freezing over. People are screaming for 85K, 80K, even lower. The chart looks dead to a lot of folks, while the S&P, Nasdaq, and gold keep printing fresh all-time highs massive. Credit to Jordi Visser for these insights. But let me tell you straight, this dead, low-energy price action is hands down the most bullish development in Bitcoin's entire history. A few months ago, Wall Street legend Jordi Visser, 30-plus years running billion-dollar portfolios, former president and CIO of Weiss Multi-Strategy Advisors, published a now-viral essay called Bitcoin's Silent IPO, Why This Consolidation Isn't What You Think. It's been viewed millions of times for a reason. It explains everything we're living through right now with crystal clarity. Let him paint the picture through the lens of every legendary tech IPO we know. Google in 2004, Facebook 2012, Tesla 2010, Snowflake, Airbnb. The pattern never changes. Before the IPO, only the founders, VCs, and earliest die-hard employees own the stock. They swear they'll never sell. They're all in for life. Then the company goes public. Lockup periods expire 6 to 18 months later. All of a sudden, those early believers finally have real liquidity. They start taking some chips off the table, not because they stopped believing, but because they're up 10,000, 50,000, sometimes 1,000,000%. They want to buy homes, start new ventures, diversify, travel the world, or simply sleep without everything riding on one asset. That fresh supply floods the market at the exact moment brand new, more conservative buyers, pension funds, mutual funds, endowments, your grandma's target date fund, are stepping in for the first time. What happens next? The stock almost always grinds sideways, sometimes even drops. For months or even a couple of years, volatility collapses. Sentiment hits rock bottom. Everyone declares the story dead. And then, once the distribution phase finishes, once ownership has fully transferred from the crazy early risk-takers to the permanent capital, the stock absolutely rips for the next decade or more. Jordi's core insight. Bitcoin never had a company, never rang the opening bell on Nasdaq. But the spot ETFs that launched in 2024 and exploded in 2025 created the deepest, most regulated liquidity pool this asset has ever seen. For the first time ever, the earliest miners and buyers, the ones who stacked when it was pennies or a few dollars, can move tens or hundreds of thousands of BTC without crashing the entire market. And that's precisely what they've been doing all year. Slow, patient, methodical distribution. That's why realized volatility has plunged below 30%, quieter than Apple or Microsoft stock. That's why 2011 to 2017 era wallets have been waking up week after week. That's why we've been trapped in this roughly 85 to 95,000 range, while literally everything else in the risk-on universe melts faces upward. This isn't death. This is the silent IPO unfolding in real time. The cypherpunks and OGs are ringing the register after a 100,000 times ride. BlackRock, Fidelity, MicroStrategy, family offices, and very soon sovereign wealth funds and nation-states are absorbing every single Satoshi through the ETFs without breaking a sweat. The latest on-chain data is beautiful. Ancient whale selling pace has slowed dramatically over the past 2 weeks. The overhead supply is finally clearing out, when this transfer completes, and many of us believe we're in the final innings, Bitcoin will emerge with dramatically lower volatility, much lower correlation to traditional risk assets, and proven multi-billion-dollar daily liquidity. In other words, the perfect institutional portfolio diversifier. Matt Hougan, CIO of Bitwise, who oversees billions in crypto assets, read Jordi's piece and immediately told his clients, "The days of 1% allocations to Bitcoin are officially over 5%, 10%, maybe more becomes completely reasonable once it behaves like this." Look at the historical parallels. Facebook traded sideways to down for nearly 2 years after its messy IPO, then proceeded to 15 times. Google did the same grind, then 30 times over the following decade. Bitcoin's boring, frustrating phase isn't the end of the movie. It's the quiet scene right before the rocket ignites. So if 89,000 felt like the world was ending today, take a deep breath and zoom all the way out. You're witnessing the greatest ownership handoff in financial history. From the wild-eyed revolutionaries to the most powerful pools of permanent capital on Earth. This is Bitcoin growing up. This is success disguised as boredom.